So a question that you may ask yourself is, are interest rates going up or down in the US? This is an important question when we look at investing in the stock market, when we look at investing in bonds and those types of things. So let's explore this a little bit more in detail. I did this by asking people on my Twitter the following question: over the next 3 years, do you think interest rates on US government debt will stay about where they are? Which you can see the answer is 33%, and 22% said go higher, and 45% said go lower. So here you can see that 22, about a quarter of the people that responded to this survey, thought that interest rates were going to go higher. In fact, logic would tell you, on the one hand, that the government has to keep interest rates low. The government has kept interest rates low. In fact, interest rates may go to negative. In addition, interest rates have been low for a long time. Why would you think that they would go higher? But I would challenge you to think about before the 2008 crisis. Nobody predicted that interest rates would go almost to zero and stay there for 10 years. Just as much as nobody predicted that, is it possible that nobody's predicting that interest rates could go higher? In fact, one way to think about this is the corporate bond market. And there we have a free market. And we saw corporate bond yields spike until the government, US government, basically gave indications that they were going to buy corporate bonds to try to be a buyer of last resorts. But eventually, it could be that we can't hold on forever and interest rates start to rise. But I would say consensus has it that interest rates are going to be where they are or even lower. So let's look at interest rates. I created a chart of interest rates over the last 100 years or so, just to kind of put it in perspective. And from this chart, maybe we can also try to think about the next direction it's going. So here is the chart, and what you can see from this chart is that interest rates have been in a massive down cycle that's gone from 14% in, let's say, the beginning of the 80s when Ronald Reagan and Paul Volcker took over. And you can see that that's now gone all the way down to nearly zero for a long-term US government bond rate. So, of course, we also know that inflation drives interest rate. And there's two ways you could look at inflation. You could say, well, a huge amount of supply of goods has come off of the production capacity of countries has been shut down. And the result of that is there's a limited supply of goods. And could it be that prices start to get bid up for those goods until supply comes back online? But the other side of that argument is that demand has also been destroyed. So maybe there's not as much demand that's not pushing up prices that high. So let's bring inflation into this chart. And here we can see the inflation rate, the blue line, and see where it's been. Now, based upon where we are and where we've been recently, I think most people would probably say, well, interest rates are going to be very low or even zero, and inflation is going to be low. One of the reasons why inflation may be low is because of unemployment. America, at least, is heading to a quarter of the workforce being out of work. When that happens, what bargaining power does the workforce have at getting higher wages? In fact, the average wages probably are going to fall as people lose the bargaining power that they had during the times of full employment. Remember, it was only a few months ago that we were at 3% unemployment, and very quickly we'll be at 20 to 25% unemployment. So it could be that you could say that salaries and wages are an important component, a huge component of inflation. And if there's no inflationary pressure there, then we don't get inflation in the economy. The last thing I would say is if I go back to the chart, take out the inflation, and just look at the long-term chart. I think someone, if you didn't tell them what this chart was and they looked at it, and you ask them, do you think that that's going to go up or down from here? I think someone would probably answer that question by saying, it looks like there's a long interest rate upcycle in that chart. What do you think? why don't you leave your comments below and let's have a discussion about it.